Hello friends, in this tutorial I will discuss introduction to accounting. In this chapter I will discuss meaning and definition of accounting, attributes means characteristics of accounting, functions of accounting, process of accounting, bookkeeping, objectives of accounting, advantages of accounting, limitations of accounting, user of accounting information, systems of accounting and basis of accounting. This chapter is in fact very fundamental in nature. And if you have zero knowledge in accounting, that is the right place to understand what exactly accounting is. So in this full uh, journey, we will not discuss about the accounting standard in depth or what are the government rules and regulations related to accounting. We will try to understand fundamentally what accounting is. Welcome back to my tutorial fundamental of accounting. Now let's discuss definition of accounting. So accounting is an art. Some authors say accounting is an art as well as science. So you can say both. If in a question it is asked what is accounting, accounting is an art or accounting is an art as well as science both. So art of recording. What is accounting is an art of recording, classifying, summarizing in significant manner. Accounting is an art of recording, classifying, summarizing in significant manner and in terms of money. So everything should be in terms of money. What we will classify, record and summarize and in significant manner and in terms of money. That is transactions and events. So these two things are we are recording, classifying and summarizing in terms of money. These transaction and event must be of the financial character. So financial character means it will affect your assets and liability. If any transactions and event are able to affect your asset and liability and you are able to measure it in terms of money, you have to record these transactions or event in your books of account, which are of and after at the end you have to interpret the result, and that interpreted result will be available to the users of accounting. Now let's discuss characteristic under the characteristic of accounting, the transactions and event that we discussed in the definition of accounting. We are recording and event. What are in fact transaction and event? In previous slide I told transactions and events have capacity to alter your asset and liability. Then it will be called of financial character and you have to record. So what is transactions and what is event? Transaction is give and take. If we are giving something and as a consideration we are receiving something, or if you are receiving something as a consideration we are paying something, in that it all comes under the transaction. So transaction happen between two parties or more than two parties, and parties are involved in the transactions. So example is purchase of machinery, payment of salary, um, sale of goods. All these are transactions. So to run the business, all the give and take, buy and sell, all comes under the transaction. But there are something that we classify under the group of event that are the happening that where we are not involved. So for example, loss due to fire, accident, or depreciation in books of account. So these are not transactions, these are the events that happen intensely or unintentionally, but we are not involved. Uh, we are not involved actively on these events. So it is happening passively. So depreciation is automatically reduce your cost of assets. So we have to record it into our book of account. Accident may happen to anyone. That's why we have to record. If accident happen, we have to record it into our books of account. And the other important thing is transactions are recorded in terms of money. So we don't have any other option. You have to record compulsorily in terms of money. To record it in terms of money, it must be measurable in terms of. Now let's discuss recording. Recording comes in under the process of accounting. Recording comes after recognition of transaction. So once first you have to recognize the transaction. Once you recognize that this is a transaction that is related to your organization, or this is an event that is related to your organization, you have to record it. Recording is a process in which transactions are recorded in books of original entry. These books of original entry are the primary place where we first record the transaction, and in other word you can say it journal book. So here we record the transaction. So we record the transaction in chronological order, and once the transaction will happen, it will take the place in your books of next transaction will take the next place in your books of account in date wise, in a in order way, date wise in order. So journal books are further subdivided into subsidiary book according to the number of transactions of a particular category. So in all the organizations, some transactions are bulk or very high, and some transactions are very less. So based on the category, based on this number of transactions, we can subdivide our journal book, and that may be cash book. So suppose the cash transaction, generally we have very huge number of cash transactions. Purchase book, purchase of goods and services, purchase return book, sales return, bills receivable and payable books. So all these books I will discuss properly in detail in subsidiary book. So because of the number of transactions, we divided journal books in the subsidiary books. And if any transaction will not fall under these category, we will enter those transaction in journal proof. So the remaining transaction will come in journal proper. Even cash books are of different type. So that also I will discuss under the separate chapter. So these are single column cash book, two column cash book, and three column cash book. Generally, we used to maintain these different type of cash book in manual system of accounting. Now in computerized system of accounting, you may have different method and classification of cash book. However, it is important to understand all these things, because manual entry will clear your basic concept. But then after, if you will go for the computerized accounting, everything will be clear, every classification, everything will be clear, and you can understand better if you have the basic. And traditionally, we were preparing all these type of subsidiary books. So these are still part of the accounting system, and you should have the knowledge. Next important step or stage is classification. So we knows that the first step is recognition of transaction. Next step is recording the transaction, and this is the third stage, classifying the transaction. So classification means transactions or entries of one nature are grouped under one head of account. head of account is new word came. The transaction recorded in journal or subsidiary book. So we recorded our transaction in journal and subsidiary book first time, are classified or posted to the ledger account. So in journal we are recording the transaction, in ledger we are posting the transaction. So posting word is used to transfer the transaction from journal to ledger. Ledger is book that contain individual account head under which all financial transactions of similar nature are collected. Example is better to understand. However, once you will start solving the questions, or once I will discuss in detail all the thing, then you will understand better. So don't worry if you have not understood some concept exactly what you should have understood, or you should be clear. Like ledger is should not be clear once you will not prepare the ledger. Journal will not be clear once you will not prepare the journal. So you have to wait for that time. So ledger, for example, all the transaction in cash will go in the cash account. All the transaction where you have paid or received the cash will come under the cash account. So all the transaction is also having two aspect. So one aspect is cash, another aspect will go their own head, so that you will understand better in coming slides.